Something major just shifted in Washington, and millions of Americans collecting Social Security SSI or SSDI are about to feel it in their bank accounts this April. The Social Security Administration has officially rolled out rule changes that directly affect monthly payment amounts. And depending on your benefit type, your household income, and when you filed, you could be looking at anywhere between $1,500 and $2,400 hitting your account differently than before. But here's what most people are missing. This isn't just a simple cost of living bump. These adjustments involve updated eligibility thresholds, revised payment calculation formulas, and new processing timelines that the SSA quietly pushed through. If you're on SSI and also receiving SSDI, your combined benefit structure may have been recalculated entirely. Millions of beneficiaries haven't even been notified yet, and some are already receiving the wrong amounts without knowing it. By the end of this video, you'll know exactly what changed, whether your payment is correct, and what to do right now if it isn't. So let's start from the very beginning because a lot of people are confused, and honestly, that confusion is completely understandable. The Social Security Administration doesn't exactly send you a clear letter explaining every single change in plain English. Instead, they update their policy pages, adjust their internal calculators, and expect you to somehow figure it out on your own. But that's exactly why you're here, and that's exactly what we're going to break down together today. Step by step, in plain language, no government jargon. First, let's talk about what actually triggered these April changes. Every single year, the SSA runs what's called a COLA adjustment. That stands for cost of living adjustment. This is the mechanism the government uses to make sure your Social Security benefits keep up with inflation. Now, for 2025, the COLA was set at 2.5%. That number might sound small, but when you apply it across different benefit categories, regular Social Security retirement, SSI, and SSDI, it starts to add up in ways that matter to your monthly budget. And when you combine that COLA with some additional administrative rule changes the SSA implemented specifically in April, the picture becomes a lot more complex and a lot more important to understand. Now, here's where it gets really interesting, and this is the part most news outlets completely skip over. The 2.5% COLA didn't just get applied uniformly to everyone. The way your benefit is calculated depends on your primary insurance amount, what the SSA calls your PIA. That number is based on your earnings history, specifically your highest 35 years of indexed earnings. If you have gaps in your work history, or if you retired early, or if you switched from SSDI to retirement benefits when you hit full retirement age, your PIA could be calculated very differently from your neighbors, even if you both receive similar monthly amounts on the surface. The April rule adjustments touched several of these calculation layers, which is why some people are seeing noticeably different changes to their payments compared to others. Let's talk specifically about the payment ranges we mentioned. The $1,500 to $2,400 window. This is not a made-up number. This range reflects the realistic monthly benefit amounts that the majority of Social Security recipients in the United States fall into after the 2025 COLA was applied. According to SSA data, the average retired worker benefit in 2025 sits at approximately $1,276 per month. But averages can be misleading because plenty of people receive less than $1,500, and plenty of people who delayed their retirement and had strong earnings histories are now collecting closer to $2,400 or even above that. The point is, where you fall in that range depends on very specific factors about your individual record, and those factors just got adjusted again this April. Now let's get into SSI specifically, because SSI recipients are in a slightly different situation than retirement or SSDI beneficiaries, and it's critically important that you understand the difference. Supplemental Security Income, SSI, is a needs-based program. It doesn't care how many years you worked or what your earnings history looks like. Instead, it looks at your current income, your current resources, and whether you fall below certain financial thresholds. In 2025, the maximum federal SSI payment for an individual is $967 per month. For a couple where both people receive SSI, that number is $1,450 per month. Now, those are the federal baseline numbers. And here is something a lot of people don't realize. If you live in certain states, your state actually adds a supplemental payment on top of the federal SSI amount. States like California, New York, and Massachusetts have their own supplemental SSI programs that can push your total monthly payment significantly higher. So, when you see someone in California receiving $200 or more in SSI, they're not getting a special deal. They're receiving the federal amount plus their state supplement combined. But April brought something specific that SSI recipients need to pay very close attention to. The SSA updated its resource limit rules and its income exclusion calculations. For years, literally decades, the SSI resource limits were stuck at $2,000 for an individual and $3,000 for a couple. These limits had not been updated since 1989, which is absolutely wild when you think about it. In 1989, $2,000 meant something very different than it does today. Advocates had been pushing for reform for years, and while a full legislative overhaul hasn't happened yet, the SSA implemented administrative guidance this spring that affects how certain resources are counted and how certain types of income are treated when determining your SSI eligibility and payment amount. If you've been right on the edge of the resource limit and worried about losing your SSI, these changes are directly relevant to your situation. Now let's move to SSDI, Social Security Disability Insurance, because this group has their own set of changes to understand. SSDI is different from SSI in one very fundamental way. SSDI is based on your work history, just like retirement benefits. You paid into the Social Security system through your payroll taxes. You became disabled before reaching retirement age, and now you're collecting a benefit that was earned through your working years. The average SSDI payment in 2025 after the COLA increase sits at around $1,580 per month. But again, your individual amount depends entirely on your earnings record. Someone who was earning $70,000 a year before becoming disabled is going to receive a very different SSDI payment than someone who was earning $30,000 a year, even if they both became disabled at the same age. Here's a critical piece of the April update that SSDI recipients absolutely cannot ignore. The Substantial Gainful Activity Threshold, the SSA calls it SGA, was updated again in April of 2025. The SGA is the income limit that determines whether you're considered able to engage in substantial work activity. If you earn above this threshold, the SSA can determine that you're no longer disabled and cut off your SSDI benefits. For 2025, the SGA for non-blind individuals was adjusted to $1,120 per month. For blind individuals, it's $2,700 per month. Now, if you're on SSDI and you've been doing any kind of part-time work, freelance work, or gig economy work, you need to take these numbers seriously. Even a few extra hours of work each month that push you over the SGA line could trigger a review of your case and potentially jeopardize your benefits. And speaking of reviews, this brings us to another major piece of the April changes that doesn't get nearly enough attention. The SSA has been ramping up its continuing disability reviews, commonly known as CDRs. These are the periodic checks the SSA conducts to make sure you still qualify for disability benefits. For years, the SSA was underfunded and behind on these reviews. But with increased congressional pressure and updated processing systems, CDRs are happening more frequently now in 2025. If you receive a CDR notice in the mail, do not ignore it. Ignoring a CDR notice is one of the fastest ways to have your benefits suspended. You need to respond within the time frame given, provide updated medical documentation, and in many cases, work with your doctor to make sure your records accurately reflect your current condition and limitations. Now let's talk about something that affects people who receive both SSI and SSDI simultaneously. Because yes, that is possible, and it's more common than you might think. This is called receiving concurrent benefits. It typically happens when your SSDI payment is low enough that you still qualify for SSI to bring your total income up to the federal benefit rate. In this situation, your SSDI payment counts as unearned income for SSI purposes, and SSI fills in the gap. The April administrative updates touch the way these concurrent benefit calculations are processed, and some people who receive both have noticed slight adjustments to their SSI portion as a result. If your total monthly payment changed in a way you didn't expect and you receive both programs, this is likely the reason, and it's worth calling the SSA to have them walk you through the updated calculation. Let's also address the payment timing question because a lot of people are asking why their April payment came on a different date than usual. The SSA pays Social Security retirement and SSDI benefits on a schedule based on your birth date. If your birthday falls on the 1st through the 10th of the month, you get paid on the second Wednesday of each month. If your birthday falls on the 11th through the 20th, you get paid on the third Wednesday. And if your birthday falls on the 21st through the 31st, your payment comes on the fourth Wednesday. SSI payments, on the other hand, are generally paid on the first of the month. But when the first falls on a weekend or a federal holiday, the payment shifts to the prior business day. April had some scheduling nuances this year that caused confusion for people who weren't aware of how the calendar-based payment schedule works. Your money wasn't lost. It came at a slightly different time because of how the payment calendar lined up this month. Here's another thing worth discussing: the impact of Medicare Part B premiums on your Social Security check. A lot of retirees are surprised to discover that their Social Security payment is lower than they expected because Medicare Part B premiums are automatically deducted directly from their benefit. In 2025, the standard Medicare Part B premium is $185 per month. That means if your gross Social Security benefit is $1,176, your actual deposit into your bank account is going to be closer to $1,191 after that premium comes out. This deduction happens automatically, and many new beneficiaries don't fully account for it when they're planning their monthly budget. If you're wondering why your actual deposit is noticeably lower than the benefit amount the SSA quoted you, Medicare Part B is almost certainly the explanation. Now let's talk about one more thing that's been generating a lot of questions, and that's the windfall elimination provision and the government pension offset. These are two rules that have affected teachers, firefighters, police officers, and other public employees who worked in jobs that didn't pay into Social Security. For years, these rules reduced Social Security benefits for people who also received a government pension. But in late 2024, Congress passed the Social Security Fairness Act, which eliminated both the windfall elimination provision and the government pension offset. This is genuinely historic. It's the biggest expansion of Social Security in decades. And for affected retirees, it means higher monthly payments, in some cases, significantly higher. The SSA has been processing these adjustments since early 2025, and for many people, the April payment cycle is when they are finally starting to see the corrected higher amounts reflected in their deposits. If you were a public sector employee and you haven't seen an increase yet, your adjustment is likely still being processed, and you should see it reflected within the next few payment cycles. This also means that some people are eligible for retroactive payments, lump sum back payments covering the months since the law took effect. The SSA has been issuing these retroactive payments on a rolling basis. If you believe you're affected by the repeal of WEP or GPO and you haven't received any adjustment or back payment yet, you need to contact the SSA directly and confirm that your record has been flagged for recalculation. Don't assume it's being handled automatically. While the SSA is working through the backlog, errors and delays have occurred, and being proactive about following up on your own case can make a real difference. Finally, let's talk about what you should actually do after watching this video, because information without action doesn't help anyone. The first thing you should do is log into your My Social Security account at ssa.gov. If you don't have one yet, set it up today. It's free, it's secure, and it gives you direct access to your earnings history, your benefit amount, your payment schedule, and any notices the SSA has sent you. Once you're logged in, verify that the benefit amount shown in your account matches what you're actually receiving in your bank account. If there's a discrepancy, even a small one, call the SSA at 1-800-772-1213 and ask them to explain it. You have every right to a full explanation of how your benefit is calculated, and you have every right to request a formal review if you believe an error has been made. The Social Security system is complicated. Deliberately or not, it just is. But it is your money. You paid into it, you earned it, and you deserve to receive every single dollar you're entitled to. These April changes are real. They affect millions of people. And now you have the information you need to make sure your benefits are accurate, complete, and working for you the way they were designed to.